So if you can be mature enough as a adult, and hopefully we're all adults here, you have to respect the measure of underlying risk. And one of the best tenets to a successful, consistently profitable trader is they are number one, respecting of risk, knowing that the first tenet to successful trading is preserving capital, not how much you can make. How much can I lose on this trade? And what can I afford to lose? And don't say because it's 2%, I can afford to lose that, because 2% for some of you is too much emotionally and psychologically. You're looking at these funded accounts and you're thinking, I'm going to get me a $300,000 account. I'm going to roll up all these accounts. I'm going to get $1 million funded. Okay. So you're saying that you're going to be comfortable with losing 20,000? No, you're not. You're not. You're going to lose your mind. Okay. So there's two stages to understanding money management and risk management. You have to know what your account can afford to take as a loss. And then you have to test that theory psychologically and emotionally within yourself. And many of my students and other people out there have done this too. They have discovered that, hey, you know what? 2%, I can't do that. That's too much. And they go down to 1/4%. What? You can't make money. Look, 1/4%, you don't need a job. Because if you're consistently able to take that 1/4% risk and you're trading with 5 times that, do the math on any of those funded accounts. See, that's the problem with Have It Your Way mentorships and dollar menu mentors. They go out there and they show you this stuff that they're not doing. They'll show you stuff. Oh, well, you can take this order block. Here's a trade. And you listen to these cats and say, yeah, I took a trade. I think I took a trade. I think I got in here. I don't know where they're from, but if they took the trade, all they have to do is show exactly where they got in at. That's how you know you're listening to a liar. With me, you see my executions. You see exactly where I'm getting in. You see the price. You see my stop. You see when I'm managing it. You see where I'm expecting it to go. And there it is. That's someone that's been doing it and has been doing it for a long, long time and has no problem showing you this is what it looks like. But you can't take risk management and money management and just say, okay, I learned this from that video. I learned this from this person. They said this is what they do. So I mean, it's applicable to me. It's not. It's not. So my advice for you, if you're trying to do these funded accounts this year, or maybe, you probably already done this and you know exactly where I'm going with it. Once you get funded, do the least. Because especially if you're new, you don't know how you're going to be impulsive on days like this and other days that you didn't check the economic calendar. Another central tenet to someone that's a professional, they will not touch the market without knowing what the economic calendar is. Yep. That is the number one tenet to knowing what not to do. Think about it. When we get into the wintertime and you see it's cloudy and such, weather drops real sudden, and you're in areas where what? Snow is likely to happen. What do? Let me see. Expecting snow? The old hats, we can smell it, just like the rain too in the warmer months. You can smell it coming. We've been around long enough. But young folks, they only see and engage with what's right in front of their face at the moment. Right now, they have short-sightedness. They can only see right in front of them. And you have to make sure that you're planning ahead. You got to project the likely scenario for you to succeed, but also compensate along the way for detours that's going to be required that you didn't foresee. And some of those are going to be uncomfortable because you want to be like your teachers, your heroes. You want to do exactly what they did. And I'm telling you, you're not going to be able to do what I'm doing because you don't know what's going on in my brain at the time when I'm looking at price. None of my students can replicate what I'm doing. They can trade with my concepts and be profitable, but they can't do exactly what you see me doing. At the moment, I'm doing it exactly why I'm doing it. Why am I taking a partial at that price? Why did I wait for this to do that? See, you can just read it in the comment sections of the Twitter and or on the videos. How did he know? And some of these people are students with me for a long time, and they know my stuff. But because I know what I'm trying to capture in the marketplace, and it might evolve as the market starts moving. I'm thinking, okay, I didn't expect that to present another opportunity to go more time in. So now I'll add more to it there when I didn't expect to see it when the trade first started. So you're not going to know what's inside my internal dialogue that's going on constantly. And all that's changing and evolving every time a 1 minute candle's painting. And that's one of the things you're going to discover in February when we start doing live sessions. As I'm talking about the 1 and 5 minute candles, the weak individuals here that don't want to learn how to do this, that only want signals, they only want to learn a bias so they can go and push their buttons and hopefully get something correct and make some money, you're going to fail because you're going to miss the opportunity of knowing what it looks like to read every single candle from somebody that knows how to do it. And when to not expect it to work, because you have to know, where is it likely that you're going to have your face torn off? You're going to lose a limb, blow an account, get mad because you did something silly and it was a small loss, and you go back and try to get it back, and that becomes another loss. And then you do what? You push and you push and you push until you don't have your account anymore. All of that is absolutely avoidable. How's it avoidable? By knowing what I'm talking about right here. I'm telling you, these are the very days that starts that whole loser cycle where you get your account taken from you if you're funded, or you blow it. If it's real, yours, your funds, your money, it's gone because you lost it. You pissed it away doing stupid stuff, not sticking to number one rule: preserve capital. How do you preserve capital? Know where it's likely to cause you loss. If there is no advantage, if there is no odds in your favor, it's one-sided, like so overly in your favor to do well. And some of you are so new, you don't know what that means. That's what I classify as a low resistance liquidity run. You can't frame that on days like this. 30 years. I've only had a handful of opportunities where it panned out for me. I was correct. I've really considered writing 5 books. The fifth book is everything not to do in trading. Nobody's buying that book. I mean, they probably will because of more of a curiosity and my name's attached to it. But think about it. You wouldn't likely see that as a New York's bestseller. But I wish I had this before I opened up my first account with Fox Investments as a trader in 1992. I wish I would have known these things. This is better than teach me the right order block. This is better than tell me how to get in. Teach me how to keep, you not keep, but how to know when a fair value gap or an imbalance stays open. See, you're all caught up with the sleight of hand. That's all it is. You're caught up with the bedazzlement of, oh, look at this. Look at this trick. I want to be able to do that in front of other people because then I'll get clout. Clout is shit. You want success. You want to be able to carve out your own paycheck and not need anybody to tell you what is likely to happen next. And you want to trust that you can do what? Keep your account in your hands, not blow it, not go into severe drawdown. You're going to have drawdown, but you need to be able to know where those opportunities are likely to occur. And if you don't want to put your time and effort into knowing that, Here's a promise that you can guarantee and take it to the bank. You will blow your accounts this year. You will fail. You will never, ever be profitable unless you do these things. Identify where it's likely to cause you loss and consistently unlikely to present opportunity for you to be profitable. Why wouldn't you want to listen to sound advice like that? It defies all logic when I see young folks, even older folks that have been trading for a while. Oh, but I've had an opportunity where I did this one time. One time you did something, and you're going to make that. It's going to have to be always for you to be in there trying to do non-farm payroll, or trying to guess what CPI is going to do, or trying to guess what the reaction in the marketplace is going to be on a rate announcement. How many times have you seen the rate announcement come out as expected and the market do what you thought it would do, but really not? It does it the opposite. And they'll say, oh, well, the market, it priced in. They didn't say they priced it in before that rate announcement. Where's the news people and the talking heads and the financial experts that said, no, don't trust anything the market's already priced in this, it's going to do that? They don't do that. They wait until after the effect of the marketplace repricing on this stuff, and then they'll say, this is what it is. Everybody knew that, right? Nobody knew that. I'm telling you, if anybody was going to know this stuff, folks, it would be me. I'm telling you, honestly, I have no advantage on these days. None. I have no advantage. Absolutely none. Come on. I mean, if I sit down and I tell you in a video, or if I wrote a chapter in a book and said, this is the secret to being 90% accurate, that's the chapter. You're all putting the potato chips down. You're telling your wife stop talking to you. You're going to physically go out and go sit in your car and take yourself away from every distraction because you want to know what that chapter says. But a chapter like this, or a lecture, or a video, or a Twitter space about these types of things, oh man, come on. Nobody wants to hear this. Yeah, nobody that wants to lose their account, that's never really traded with real money, had loss, blown several accounts, and figured it out that, hey, this is a problem. Because you can have all the resolutions in the world. You can write down a goal for yourself for this year, all you want. You can be encouraged by everything else I'm saying. And you can learn some really good stuff this year. And it all works. But guess what? You're going to lose your ass when you don't know this. Because this right here is what takes everybody out. Not knowing what's going to hurt them. You can't just keep pushing and pushing for the purpose of just trying to make money and not identify the necessity for a shield. You're going out there with your spear, you're going out there with your sword, okay? You have to have some kind of protection, your shield. What is that? Wisdom and money management. You have to have wisdom before you can even implement money management. So what's the purpose of the money management? You have to know, where is it likely for me to fail? And some of you, especially young men, want to ignore that because you view that as weakness as a young man. That's somehow attacking your manhood, your masculinity, your identity. No, identifying weaknesses and knowing how to navigate them, that's strength. That's maturity. That is mastery. I mean, if you want to dabble, you know, like going to a casino and playing the one-armed bandits, and you want to treat trading like that, by all means, be my guest. I don't want students to think that way. I want them to understand this is an area in time where probabilities are so shifted against me. I have no business going in there regardless of what I see in the chart, period. End of story. It's done. It's not up for discussion. It's not up for debate. It's what it is. It's the gospel. Live by it.